Today we're going to be discussing Coupang. Coupang is currently an e-commerce platform that has one of the most sophisticated e-commerce logistic delivery systems in the world. Coupang's big claim to fame is that the average delivery times are under 12 hours, and approximately 99% of their orders are delivered in one day at the most. Many of you have Amazon Prime. Amazon Prime still takes anywhere from a couple days, so this is pretty impressive. And that's why I think it's important for us to talk about Coupang today. Coupang stock has recently IPO'd within the last year, giving it not much history to play with. From our review, Coupang is definitely a disruptive e-commerce player. Its only limitations are that it's concentrated in South Korea. That's not going to stop us from looking deeper into Coupang and what might be one of the biggest growth plays of the next 5 to 10 years. With that said, welcome to Total Return Network. Today we're going to look at Coupang and we're going to compare it to some of the big players such as Amazon and Sea Limited. And let's see if we can make some money.
Total Return Network.
So before we jump in too deeply into Coupang's numbers and analyze the fundamentals, I think it's worthy of talking about Coupang's management. And by that, I mean CEO and founder Bom Kim. So Bom Kim is essentially a Harvard School dropout. 6 months into his MBA, he decided, this isn't for me. Eventually, after that, he decided to start his own company. And that's how we got into Coupang. He had a belief when he was in grad school that he had a very short window to do something that was impactful. He certainly did, and now he's raked in about $9 billion in his personal net worth fortune from what's been dubbed the Amazon of South Korea. He started the business in Seoul in 2010 to take advantage of what he saw as a technology opportunity in a growth market. Today, his company has a user base almost half the size of the country's population. He didn't exactly want to be like Jeff Bezos, but that seems to be what he has become. In fact, when Coupang started in the late 2000s, it was really more of a Groupon type company. The business model has changed a few times over the years, but ultimately the business has been deemed a success. And that's how today we're going to review the IPO, the stock performance. We're going to compare them against a couple of other big players such as Sea Limited, Singapore's answer to Amazon. We're also going to talk a little bit about Jeff Bezos and Amazon stock performance. Now that we've touched on the CEO and his history, and I think he's quite an impressive young business entrepreneur, let's talk about Coupang as a macro picture, and then we're going to pivot into stock performance in just a second. So Coupang's big claim to fame, like I mentioned, is their delivery time is really fast, under 12 hours. They claim that 99% of their orders are delivered in a day at most. And for a nation like Korea that has a very high interest in online shopping, this is actually pretty impressive. So I look at it as you can get the product in the customer's hand faster, you have a happier customer, and you're more likely to have more orders in the future. And I think this translates into the growth picture when you look at the revenue numbers. They've used a concept known as the Coupang Man that has helped deliver above average growth. And Coupang Man is kind of like their mascot, so to speak. One of the biggest limitations of Coupang at this time is that the primary market is South Korea. Size of the country might be small, but size of the market for goods and services is pretty big. Total retail market has been going up in Korea, has a 2-year compounded annual growth rate of about 5%. E-commerce has grown over 20%. So Korean e-commerce growing at 20% is quite a big number and presents a pretty big growth opportunity for the country. So there is a lot of leg room left in this growth story. Coupang has an interesting culture. Much of their culture comes from differentiating themselves among a lot of their peers. So typically Korean business culture is very hierarchical and paternalistic actually. So status is determined a lot of times by age and their connections. Not too unlike United States, but definitely more so in Korea. Management team in Coupang is structured to break the traditional hierarchy, and they like to have all Coupang employees call each other by their English first name, which I think is quite unique. And that applies from the lowest worker to the CEO, Bom Kim, who is called by his first name by almost all of his employees. This has created a culture at Coupang of having free and open communication, which is intended to foster innovation. Coupang is also a leader of work from anywhere, a movement that became popular in the COVID-19 pandemic. Traditionally, Korean companies like to have most of their employees in the company's headquarters. I look at Coupang as having a very Western, forward-looking innovation stature from this work from anywhere paradigm. A lot of the near-term risks for Coupang is essentially the COVID-19 pandemic and supply chain disruptions. Coupang's pursuing a growth strategy known as blitzscaling, which is a method to rapidly build up and grow a company and serve a large market. Essentially, this is a method that Amazon actually used before to grow in both United States and Europe. Blitzscaling is a high-risk, high-reward strategy in which a company will often forego short-term performance in favor of long-term growth. Many investors actively seek to avoid such stocks during risk-off market environments. So this kind of explains that Coupang is willing to forego their bottom line earnings, which essentially translates to net income and earnings per share, which is why I think the stock has been suffering. But if long-term performance is any indicator, and you compare it to Amazon's long-term performance, then this might actually be a sound strategy in growing the business. Jumping into the numbers, I want to compare some of Coupang's biggest competitors. So starting off, to give you perspective, what I have here is Amazon and C Limited stock performance. This is over the past 3 years. What's really impressive here is C Limited actually has a compounded annual growth of 100% per year. That means that C Limited, if you had invested $10,000 in the beginning of January 2018, your balance would be $167,000 right now. So your $10,000 would be worth almost 15 times what it was worth in 2018. With Amazon, definitely nothing to sneeze at. Your value went up by about 3 times with a final balance of 28,512. Compounded annual growth rate of 29%. Let's take a look at Coupang. Coupang only has a shorter history here with an IPO that took place in 2021 of Spring. So Coupang actually has underperformed the other two quite significantly. First of all, Coupang since IPO is down about 40%. So you're $10,000 worth less than $6,000. Moving into C Limited, your $10,000 from a year ago is worth roughly what you invested, and Amazon is up about 7% from about a year ago. So, what do we see here? We see a potential opportunity in Coupang since it's underperformed. Now we have to consider, is the underperformance justified? Here's the year-to-date performance of Coupang, moving from the 40% year over year to the minus 26%. Amazon down only a few percent. Here's the one-year picture of Coupang, so really down quite a bit compared to C Limited, which also presents an opportunity, but I think that they have more room to go down. Amazon is pretty flat, so nothing major to really talk about, except that Amazon might have more room to go down if you consider it overvalued. That's a separate discussion for another video altogether. Let's look at Coupang's revenue. Coupang has a revenue of $17 billion. So they're at $17 billion in top line sales right now, 2021. According to 2020, they were at about half of that, just a little bit over half of that actually, at $12 billion. So you can clearly see that they are trending higher at 17 billion. Let's look at C Limited and see why they're worth so much. So C Limited in 2020 wasn't that high. It's only a few billion, and right now it's at about 8 billion. This is top line sales. Amazon, the behemoth, is way bigger than both of them, representing $457 billion in top line sales. Definitely massive. If you compare it to a few years ago, it's worth about $280 billion in top line sales. So from $280 billion to $457 billion, you can see that Amazon's growth story is very much intact. But so is Coupang's. The problem with Coupang is they haven't been able to translate it into bottom line earnings. Coupang has a few competitors in Korea, but again, they're nowhere near the size. They're outpacing their competition even with CJO Shopping by about 17 times more sales. I thought this was interesting too. Over the past 3 years, revenue per customer in Coupang has jumped from $127 per customer annually to about $256. So that means every customer that they have is spending about 2.5 times more than they did. It's not inconceivable by 2025 that each customer could be spending close to $500 to even $1,000 annually. Now, that would mean Coupang could potentially go from having $17 billion in sales to close to $100 billion in sales. And in my view, the stock would be worth anywhere from 3 to 5 times where it's at right now. That's a little bit aggressive. A lot of that's going to determine by how much they are actually able to translate that into earnings. But we've seen that Amazon has been able to do that. One of the reasons C Limited has been able to do that more successfully is because of their concentration into digital platforms and entertainment. Coupang has the same opportunity and certainly can do it. They have competition from other digital streaming services, but with their scale and their trust from their customers, it represents a huge time opportunity. Based on recent stock performance, especially lately, Coupang is less than $21 per share. Their 52-week range has been pretty interesting, to say the least. They've gone from $69 to just under $21. I think fair value is roughly in the 30s. I'm not going to give an exact stock target because I don't like to do that, but I think fair value right now is in the 30s. That would represent them being about a $50 billion company, which would only be about 3 times sales, which they will catch up to within the next couple years. I think that's pretty clear. Now, when they translate that into earnings per share, if they're able to improve their operating metrics, the growth story is clear that Coupang could very well be a $100 stock. Looking at C Limited, C has been able to do that more successfully over the past few years. Their stock has been suffering recently, but that's after an incredible run where, like I mentioned, you would have made over 10 times your money if you had invested in 2018. My end results analysis on Coupang is that you can make anywhere from 25 to 30% based on an investment right now, even considering the Federal Reserve's headwinds. I have no issue recommending Coupang because it doesn't have the same issues that Alibaba does. Again, I'm not a financial advisor, so please do your own research and consider this information as entertainment only. So this is Total Return Network signing off. Have a great day and best of luck in your investing.